Some of the main questions that I've been getting a lot is, Douglas, I'm thinking about paying off my house. Douglas, and I saw a video of yours that you talked about don't make extra payment on a mortgage. So here's the deal, right? Let's break that down a little bit more for you. And you tell me if it makes sense to you. So first off, if you have a mortgage, you went to the bank to ask them for a loan, right? The banks didn't come to you. You went and said, I have a dream house that I want to buy. And the bank said, how much is your dream home? You said $300,000. So I'm going to get my loan calculator and I'm going to do the math on that. Okay. So 300,000, let's just assume this amount for 30-year loan, and let's just say a 5% interest rate, right? 5%. Okay. So we won't use that. So your monthly mortgage payment is $1,610. Now, let me even get up for this. So if your monthly mortgage payment is $1,610, the bank is saying, hey, pay us this for the next 30 years, right? Now, what do? You decide, you know what? I want to pay it off early because somebody said to you that if you make extra payment of $1,000, you're going to pay this off early. Well, by you making that extra payment, the thing that you did forget is the fact that an extra payment, let's just say $1,000. So now you're giving the bank $2,610. The bank didn't ask you for that money. You chose to give it to them because the bank already said, hey, can you pay for the next 30 years? This is how much you're going to pay us. And they tell you the interest in this example, the interest is going to be about $279,000. But what do people do? We start counting the bank's money. You start counting the bank's money instead of figuring out, how do I count my own money? Why should I give the bank extra $1,000? Let me take that extra $1,000 and put away for my financial future. Now, I'm not going to put any calculation interest on this money. If you take $1,000 and put away for your future self for the next 30 years, that's about $360,000 every month, every year for 360 months. $360,000 that you're going to give up just because you didn't want to pay the bank $279,000 in interest. Who cares how much the bank makes in interest? I don't care, because if I take that same $1,000 and I earmark it, put it into an account that pays me a compounding interest, not an investment account, a compounding interest account, meaning it's guaranteed interest. I'm getting 4% on that compounding interest account every month, every year for 360 months will give you $694,000. That's including the $360,000 plus an additional $334,000. See, a lot of times we throw our money away, our wealth away to the banking institution. Do you understand this? Let me help you with this last thing. Banks make money loaning money out. That means everybody that has a checking account, a savings account at a local bank, a CD, the bank is taking their dollar. That dollar that you have in the bank, they've taken it, they have an agreement with the government to take your dollar and loan it to 7 to 10 different people. That means if they give you the $300,000 that they gave you, they gave the same $300,000 to 7 to 10 different people. So they're going to make interest on 7 to 10 different people. So you giving them back their money quickly, it's pissing the bank off because now they got to find somebody else with good credit that they're going to give the money to. Right? That's why banks don't loan money to people with bad credit. They don't do it because it doesn't make any financial sense for them. So remember this. Good credit, great credit is queen. Cash value life insurance is king. Keyword, cash value life insurance. I didn't say cash. Cash value life insurance is king. Credit is queen. But they gotta be married to make money, babies. See you at the top. Let's go.